Good morning. We will pay attention to trade discount, cash discount, and to determine the cost price of goods purchased. We will subtract the trade discount from the cost price to determine the actual price that we are paying for the products. We don't record the trade discount, so no entry for trade discount. If we want to calculate what is the price, if they allow an additional cash discount, it means that we will first subtract the trade discount from the cost price, and that is the price that we owe to the supplier because he's giving us trade discount for bulk purchases and because the things are bought for the purpose of resale. If we are prepared to pay cash the day when we buy the goods, they allow an additional 5% or 10% cash discount. So from the answer that you calculated here, you will subtract the cash discount and you will still not record any entry for trade or cash discount because you don't pay the money and you don't increase the asset inventory because of a discount that you received. When a business buys goods from a factory or a wholesaler, trade discount is allowed because the goods are bought for resale or because it is for in bulk purchases. No entry is ever recorded for the trade discount. You deduct the trade discount from the price to determine what is your actual price that you paid for the goods, and that will be the cost price of your inventory, and that is the amount that you owe to your creditors. Trade discount is deducted from the purchase price before the entry is recorded so that you can determine the actual purchase price and the amount owed. Cash discount is deducted from the purchase price before the entry is recorded because the cash discount will also reduce the purchase price and the actual amount that is paid out of the bank. If the goods are paid on the purchase day, cash discount is allowed on the purchase price after the trade discount was deducted. Mamelodi traders bought goods from ABC wholesalers on credit for 8,000 less 10% trade discount. The price is therefore 8,000. Calculate 10%, deduct the 800, so your actual purchase price is 7,200. Inventories will be debited with 7,200 and creditors control will be credited with 7,200. Because after the trade discount was deducted, you determine the amount that you owe to the creditors. Inventories will increase assets on the debit side. Creditors is credited to increase liabilities. We will receive a credit invoice from the creditors and we will record it in the creditors journal. We bought goods for 8,000, received 10% trade discount and additional 5% cash discount if we pay for the goods immediately. To determine what is the cash price, we will take the 8,000, deduct the 10% trade discount to determine what is our credit purchase price. Because we are prepared to pay this credit purchase price immediately, we will calculate 5% on the 7,200 and I will reduce the 360 so that I can determine what is my actual cash purchase price. The cash discount is therefore deducted from the price that you calculated after the trade discount, and no entry is recorded for trade discount or for cash discount. The inventory account will increase with 6,840 because our assets increase with the amount that we actually paid for the goods. The inventory account is credited to reduce the money in the bank with 6,840. it will be a cash invoice that we receive for the goods, and because we pay out money, it will be recorded in the cash payments journal. Trade discount and cash discount is deducted from the purchase price to determine what is the cost price of the goods that we purchase. No entry is recorded for trade discount or cash discount.